Welcome back to my final more important chart appraisal on Thursday the 28th of January with me, Rich Pro Market Analyst at Antec Markets. Let's look at gold now, and we've had this run higher in gold. Sorry, just changing charts back to gold daily. And continues to move actually. We've had 2-day close above that resistance at 1,112 and it certainly seems to continue the run higher. You've got a nice run higher of higher lows on the RSI, higher lows also on the stochastics pushing higher. Maybe a bit of a sort of rolling over with that stochastics up at oversold level, overbought or overstretched levels. But you're sort of still pretty confident, I think, moving above that, all the moving averages, 144-day moving averages, seemingly starting to flatten off. Look here on the hourly chart, which is a strong uptrend channel. Actually, look at that, really well defined one as well. And you're looking pretty much across the board, strong momentum. Hourly RSI continues to find support around that sort of 40 level. Hourly MACD lines coming back to neutral, sort of finding support. Now the question is this a bear or negative divergence? The higher highs of the last couple of days, lower highs on the RSI, on the hourly, lower highs on the MACD and on the stochastics. Is that a sign that the run higher is beginning to lose a bit of momentum? Not sure yet. I think we'll see how this one plays out, because at the moment, certainly, I'll just zoom back out, 1,110 is the key near-term support. That breakout support that found old resistance becomes new support. Again, that new support around 1,110. Yesterday's low, 1,114.50, is the initial support. Again, it's sort of consolidating slightly above that, so it'll be interesting to see if the hourly RSI starts to go below 40, or whether the MACD lines start to move seriously below zero. But at the moment, we're still holding on to this nice uptrend channel. That support, the trend channel today, comes in around that sort of 1,110 mark. So it's pretty much all pointing towards still buying into the dips. But there is that caveat of that possible sort of negative divergence on the momentum. But for now, I'm still backing this as a recovery. You're still looking towards further moves into the old sort of resistance, having moved clear of this sort of old trading band 77 to 98. So now moving towards the next key level, I think, which comes in around 1142, which were these old lows from Q4 2014 and 2015, early 2015. So I think that's your next sort of level at which you could see gold coming back into on this recovery. But for now, you're still backing this as a bull recovery, and the dips are being bought into, and there's no real reason why this latest little sort of correction within the uptrend channel is not going to be seen as another chance to buy. So I wish you good luck in your trading, and I'll speak to you later. Oh, or tomorrow actually now. Thank you.